Hey guys, this is Simon with Trade and Perform Coaching. This is how you get a hold of me. If you have any questions, tradeandperform@gmail.com. And wanted to show what the bottom looked like yesterday and what it looked like on setup, right? So first I'm going to go through the setup. What the setup is that we're looking for. The entire idea behind this whole concept is that you get to a place where you want to trade, right? So whether it's at a low, a high, a key location on the chart, number one, right? The idea behind it is the algo, instead of using a 5-minute bar, per example, if you needed this chart and you're trading on a 5-minute chart, for example, let me see if I can pull the chart really quick. And apparently I can't. Hold on one second. Let's go to, there we are. Okay, so trading on 5-minute bars could be relatively difficult yesterday. A 5-minute bar goes from 37.20 to 37.35, 15 points. Most people aren't going to trade off a 15-point chart, right? That is a lot of money to risk. For example, let's say you thought this was the low and you put your stop right below, you got stopped. Even here, if you thought the trade, the low was in, right here, even if you thought that low was in, then you're still looking and going, oh, I don't see how I would have been able to leverage that trade up because that bar covers more than 10 ES points or $500 a contract. So I'm going to show you. So that same location, that's the low of the day. And it's pretty common for most traders to go, hey, if we can break the low of the day and trap back in, we're in good shape. So instead of working off that on that 5-minute bar, and by the time you see the trap, you're somewhere between 37.30 and 37.35, right? So here's the series. So first let me show the chart, the trade, just as it is without location, right? So the way the trade works is you get a Apex algo fire. So that's a blue bar. It's the only algo that does not fire on this chart in real time. So you don't have to respond to it in real time. That bar forms on this third bar. That's when I know I have that Apex algo fires. What I then want, this is really critical because I have time to watch it and then respond. I'm not having to be hyper responsive to the market, is I then want the market to come in and take that out. So I'm going to put a line right underneath it. Okay, that's the entry. This is the setup. Hey, we may trap, right? Then there's the actual trap. It's this bar with a star on it. If it hasn't, this one actually has 2 stars on it. If there's an algo on it, all the better. So, for example, if you were trading for a higher low, which would make sense there, right? This is actually a 50-60 retrace. If you look, this is the push. This is the 50-60. So we're using the most conservative method, which means from the apex of the prior move, I want the trap to occur to the right side of that apex. Here's the TnP algo, Apex algo 1. There's the stop. I want to get really clear. And I have a range bar predictor that tells me where this bar is going to print. So in the room, I'll say that trade will set up long and it will set up at 37.26 and a quarter. And normally what I would do is put a buy stop there at 37.26 and a quarter. So what's my risk? My stop is 1 point below that bar. So I measure the bottom of that bar, 37.26 and a quarter, 37.22. I'm going to put my stop at 37.2150. You don't have to add the extra point. I do. 37.2150. So it's either a 4 or 5 point risk. And then obviously you're going to try and get, I scale 3, 5, and 10, or I scale 3 and 5 to get the first half because I trade leveraged, right? Now, if I don't trade leveraged or super leveraged like I do, I can do it the other way. I can always go for a 1-to-1 RR on the trade, or even better, a 2-to-1 RR on the trade. The win rate is high enough that it'll pay out on both of those very, very nicely. I trade leveraged. I have to get some of the risk off. I feel better getting some of the risk off. So the other thing that I would naturally shoot for here as an immediate target, right, is this. I'm going to come from here to here. And I'm going to go, can I at least make it back, halfway back for my swing high? So what this does is if you shoot this out, and you can do it on a 5-minute to look for your targets and everything else, right? It was a pretty wild day. But if you look at this, I have a target up now, which I'm generally going to shoot for the 50 retrace, right? I had an area to look for because I was at the 50, 60 retrace off the top, right? I have a defined entry of 5 points, and then I'm going to shoot right into that 50 retrace, which is 37.34. So my entry would be right here at 37.26, right? And that obviously rolled to the 37.34, and it was pretty crazy yesterday. So I imagine I'd probably be all gone at that point. But that's 26 to 34 is about 8.5 points, and that's $400 a contract, and it's a great, great trade, and it's set up really, really beautifully. It actually, that was a supernova setup. It just didn't go supernova quite there. That's for the teammate. The people in the room will know what I'm talking about. And now you're given a new parameter to set up, right? Because if you can trap again, if it hits this and comes back, so there's no magic way to know to unload all, load all. I'm short term and heavily leveraged. I unload all. Also, for people who are trying to qualify accounts, you're just trying to get to that point where you have enough P&L to build your capital for the day. The other thing I want to point out is that one trade, that $400 trade, that's per contract. You have 2 contracts and you scaled, let's say you scaled your first one at 3. That's 150. You scaled your second one at, let's say 8, right? 8 was a reasonable target, or even the 31.57, right? The 26 to 31, that's still 31, 26, 5, 6 points. 300 plus 150, 450 a day. Look, that's a lot of money through the course of the year. If you do 450 a day, it's I believe it's $75,000 a year. It's a lot of money, and this trade repeats and repeats and repeats. Let me show you why I scale over here to the right. See how it trapped again, right? See how we came in and we trapped again, but it was a time frame that it's not a trap that I would use in my trading. It didn't trap on anything here, right? So if you look now, I have 2 things. If I come out and take out this low and trap back into it, I know that I could have a really monster trade, specifically because that's the bar at the low of the day, right? And it's pushed away from it significantly. But I can do the same measure yet again. I get the push, do my 50-60 retrace. So I know this is the area where I would like to form the traps, right in here, right? So if you look, now I'm going to erase all that. So if you look, here's trap 1. You can clearly see that got taken out. And here's where it gets a little bit tricky. It was a hard day, right? So the market was fast. I don't recommend trading non-farm payroll to begin with, but I want to show what it looked like. So if you would have entered, your entry on this trade would have been right here, right when this bar closes. You already know you had advance warning. There's the trap. There's the entry, 37.27. Here's why. Remember, I'm going to have about 5 points of risk on this. It goes from 37.27 to 37.32, which is why I take off about half my risk at 3 to 4 points. Why? Because I can get it all the time. And under these conditions, so I'm going to go through the series, right? So let's just say I took a 3-point stop and I lost on the balance, -5. So that's going to be a -2 on half size. So net -1, right? Let's call this -1 here, right? I'm going to trap again right here. And remember, I'm trying to get, this is the idea of, hey, I'm trying to launch it back to the upside, right? If you're scalping, you're doing just fine anyways. It doesn't really matter. Here's trade number 2. We're trapping from this bar to this bar. You can see clearly closed in. Your entry is 37.26. The best I could have done would have been 37.31. Again, 3 and 4 points. I'm going to lose a point over here because remember, I'm trying to push it out, right? If I'm scalping, it's just 3 and 4, 3 and 4, and I'm a happy camper, right? That's $300 over 2 trades. I'm good. As I'm coming in over here again, we trap again. My entry this time You'll notice it's not nearly as quick as I'm going through here. You'll notice in this case, in a fast market, like ES is really like 4 or 5 trades a day. Yesterday was just nutty, right? So again, I'm long 37, 24, 75. I'm putting buy stops in on these trades, the best I could have done. And I do lean long only, right? So you're going to come back and say, well, Simon, I could have shorted this, and go for it. I don't short in the hole, and I don't like shorting, just harder in general, right? So now I come in, I'm long 37, 24, 75. Again, 3 and 4 points I'm going to scale. I'm going to come in. The best I could have done is 24.75 to 29.75. Again, so in this case, if I'm trying to get the turn, I'm going to lose pretty much 1 point on each of these. If I am scalping through this, I'm going to make 3 or 4 points on each trade and be very, very happy. Like that's 3 times 3, 9 points. That's pretty good on minis. You're doing really well, right? And then lastly, we come all the way over here. Remember, I'm trying to push this trade. So there's my trap off the low. I'm going, wow, I can't believe they gave it to me. Here's my entry. Here's my stop. Plus a point. So 1875 to 14 and a quarter. So just under 5 points, right? So here's my first 3 points, right? I wouldn't have any better idea that it's going to scale, other than the only difference on this trade is, so these bands, we call them the TnP radar bands. You're shooting to, if you're entering here, you're shooting for the top of the band. We try to make it easy because you don't want to have to be so technical that you're thinking. You're just trying to hit the top of the band, right? So in this case, I have a chance of getting an extended first scale up here at 37.24. So I probably still scaled at probably 4 or 5 points this time instead of 3 points. And this is where I let it come back. Remember, over here, I'm letting the points come back, and I'm down net 3 if I'm trying to catch a reversal. But now I'm in, and that thing goes supernova on you, and it's just gone for the rest of the day. Okay, so that is why the team members in the room love the TnP Apex Trade. Because first of all, it does 3 things. It gives you time to think about the trade, right? It's not instantaneous. You don't have to watch each algo print and jump on it. You see it print, you know where the market has to come back. And I want to show you something. Most days aren't like this. Most days it looks like, well, something like this, right? So this would be the afternoon, right? And you would see this was Wednesday afternoon. And oh wait, was that Wednesday from Fed? Yeah, let's get rid of that too. Here, let's do this really quick because it's still faster than we would want it. Data limiting. Let's go 15 days back just to show you a more subdued market for a second, and then I'll let it go. Take a sip of the coffee. Nice Saturday morning. Here, we'll go back over here and show you. So this is the 24th. It's a Monday, right? A little bit more subdued on the setup, right? So that's 3:44 in the morning. Works great, 3:44 in the morning, but almost no one's here. We don't trade this 9 a.m. trade location, so prior to 9 a.m., so let's get past 9 a.m. So here, this is a nice little example because it would have shown the rips down, right? So you see that we're rolling to the downside over here. Here's potential 1. Put a little blue line next to it, no trap. Potential 2, obviously no. It would have had a trap back in over here. No trap. It doesn't make it. Number 3 and number 4, right? So you know it's coming. You have to see it close back in. It's just simply not closing back in. Here's 5, potential. So if you look through this period from this 9 to 9:21, you're like, oh, maybe, right? And then you're like, oh, okay, finally, we close back in. Now remember, hopefully that's location. I don't know. I'm not going to go back and look. But that's a trap back in, right? At 37. So my buy-in is at 37. Let's just call it 56. My stop is at 37. Let's just call it 51. Okay, so 5 points of risk. Again, I'm going to target this yellow area right up here. But even if I miss it, that's still 37.59 as I'm approaching it. I'm just telling you, I probably scale 3 to 4 points up to get most of my risk off on the first trade. And then I can decide, hey, I'm going to try to push this trade. Team members in the room, you'll notice this goes supernova. Team members know what that is. And then I'm going to look and go, oh, I got this punch to the upside. So the first thing I'm going to do is, hey, can I get back to the 50-60 of that move? I'm going to draw this up. And I'm going to use my most conservative approach, which means I want to trap on these bars. And obviously, the idea would be to take out this swing high up here to the left, right? And the whole point is, instead of using a 10-point bar or a 5-point bar, looking at this on time, is the precision in entry, right? So we're going to come over here. And I'm going to tell you, if I can't get back to the 50-60, I'm probably not taking this trade, right? So here's candidate 1, right? Touches the 50 retrace. So everyone in the room will tell you, I hate trading at the 50. I prefer the 62, but let's just go with, I just took it, right? Touched the 50. And I took the first trade back in. That entered. I had 5 points worth of risk. And I don't know if I even got 3 points there. Let's see. 72, 2. I would have been targeting this yellow, but the best I could have done was 74. So this is a great example. I didn't even get, I just missed 3 points, right? It's 72, almost 75, but no dice. I would have lost. I want to be clear. I'm usually like shooting for that 3 points, right? So I would have lost 5 points here if this had been me, and I'd been mad that I had taken it at the 50 retrace. Fine, no matter. I'm going to stay on process. Here's my next entry. So I'm -5. I'm minus $250 a contract there. Now I'm 37, 30, 50. I'm not trying to make up what's at the left, right? My stop's going to go at 37, let's just call it 65. So 5 points, basically 65.50. 5 points. Again, I'm going to try and target this yellow line right up here. I'm probably scaled for 4 points right there, 3 or 4 points. So, and now here's where I make my money, right? But now I can start looking at my trailer and going, hey, can I take out the swing up here to the left? And then, so remember, I'm down 250 from here, right? So on one contract, and that's on 2 contracts, so that's net 500, right? So now I am, or at least two contracts is our example in this case. So now I am down because I've taken 4 points. I'm still down 300, right? And then I'm going to go, hey, can I push this trade, right? Or can I use, or even if I just go, I won't sell till I see the next negative bar. That still pushes me from 37.70 to 37.81, right? So on the second contract, I made 11 points. That's $500. I was down 300. Now I'm plus 200 on the day. Why is that important? Let me show you. Because as I come over here, right, I'm going to look for my next trade setup, right? I'm going to look for my next trade setup. So I'm going to, so remember from my peak, I want it to trap to the right of the apex, right? So if this is the push back up and this is the peak, I'm using the most stringent example. So I'm going to go from here. And so I have to trap on this side. So my first opportunity to trap, let me erase these lines so we're clear. So I'm going to go, this is my apex, and I want my trap to occur over here. So I'm going to spread that out. That's my next trap, right? Because I'm using the most conservative approach possible. So from my high, until I form a new high, I'm fine taking anything that sets up on the right side of this, right? But I don't want to reach back to the left of this unless I'm willing to accept the stop rate, which is a bit higher on that, right? So this ends up being my next trap, right? My entry is right here at 37.87. Here's my 3 to 4 points, which would be 91, right into the top of this band, right? And then the best I could have done on that trade, if I thought it was going to the moon, this is back on the 4th, right, would have been 37.08, which is more than capturing my profit. So this is taking profile. So we're taking profile, we're adding in location, right? and then we're using a very specific entry method to limit our risk. And this is just a scalper's delight because it lets you turn your scalping trades into swings. It lets you turn your locations into minimal risk locations instead of huge wide stops. And it lets you get rid of just the level because now you're looking for the specific setup. And as you can see, it tends to set up over and over with scalps all day long. Anyways, my name is Simon. I'm with Trade and Perform Coaching. If you'd like to ask for a 5-day pass to the room, if you'd like to be a profitable, consistent trader, hit me. Everyone in the room is on the same process and is on the same team and making money. So looking forward to having you in the room. And we turn losing traders into break-even traders first, and then we turn them into winning traders. So it's a process, but once you learn it, you've got a process that'll make you money for the rest of your life. Talk to you later, guys. Have a great day.